Trading positions, retail, banks, institutions, still pretty long of euro dollar, really long, I suppose, of pound dollar at this point.
Yes, very long. In fact, a noticeable thing there is how quite a lot of them are neutrals. And then there are these much more extreme positions, obviously euro sterling, cable, sterling yen.
And I suppose dollar Canadian, worth a mention?
Yes, dollar Canadian, definitely. I mean, we've been powering through, and the data, we've also got important data out of Canada today. They've got their monthly GDP data, expected to be reasonable at 0.2%. A stronger number will probably just give an extra leg to the Canadian dollar, particularly as it's being also helped by the fact that we've got the oil prices recovering, and for want of anything else, it quite often trades on the back of stronger oil prices.
So a bit of a rocky ride around this low from the other
Yes,
year?
I mean, you look at that chart and you go, well, however stretched does it need to get before we have a meaningful correction, because there really hasn't been a meaningful correction. And that's, I suppose, the big risk with this particular one, that there hasn't been a proper correction. And if you were to even look at a 38.2 or a 50% retracement, that's really quite a sharp move.
But we got sort of a payback there a positive payback for traders in terms of that 1 year chop, which was just horrible going in towards the 135 zone, which was, I wouldn't say untradeable, but it really was rather nasty. And then all of a sudden right down again.
All of a sudden.
I mean, corrective, it was a corrective move, a horrible corrective move.
Yes, very, very ugly, and certainly a classic example of how how people being caught long and wrong suddenly turns into a momentum trade.
Okay, let's just go for the finish off with the euro sterling, where people are apparently long up to the eyeballs of this, betting, I suppose, on 90 being breached.
I assume that's what the assumption is here, but the momentum does seem to be gradually petering out on that move, to my way of thinking. Particularly if you look at that congestion that we've got back from the end of last year in that area, you're going to need something to really power it through that 90 level on a sustained basis.
So some political mishap, let's say.
Yes, that would be probably the most obvious one, because that's the thing which tends to catch people offside. It's not something predictable like an inflation number or an unemployment number or a GDP number, which people can see coming, and if it comes down in the line, there's no incentive really to trade much other than very short-term intraday trades.
Prime Minister Davis turning up for something like that.
Well, that would certainly, yes.